Good evening, folks. Welcome to TopGunStockTrading.com. This video is for Sunday, February 9th, 2014. Looking back on the week that was, folks, definitely a volatile week we had. We did suspect that this was going to happen. And we even talked about it last week, and even before that, we expected a big drop, a bounce, and then a float up, positive bounce into this into the 181 level, somewhere around these levels in here. However, I will tell you that I did not expect it to get back up there that fast. I expected a longer period of time floating up there into these levels. But the last two trading days was a pretty big bounce. So it got up there faster than I thought it would. However, we are there at that level. So is there much upside? I don't think there's much more upside left before we have a pullback again. What am I looking at? I'm looking at the 180, 50, 181 level, somewhere around. Let's just call it the 181 level, plus or minus 50 cents for the spiders. Monday, Tuesday, maybe even Wednesday. I'm looking for a pullback day on Wednesday before we kind of settle out and maybe inch higher after that. But we'll see how we go. I will tell you, I did buy the SSO last week. I had that on my on the website TopGunStockTrading.com. I bought it at the close on Monday, which would have been this day, that big large down day. And the reason why I bought that was we're in this big long trend line, as well as some support levels, and one other factor, proprietary factor that I use. Combining all three of those factors in my three-dimensional trade, I decided to go long the SSO at 91.21, I believe, was the price of that. So yeah, 91.21. It dipped down another 40 cents at the close on that day. So 91.21. So I'm still holding that. I'll be looking to exit that trade on Monday, at least half off. So I'll look to take profits on that SSO, take half off at least, and set a in the money stop, a trailing stop, and see if we can eke out any more gains, just to kind of capture the last part of any upside type of maneuver, type of motion that we have into this. I can tell you that the Friday's movement in the stock closed above that red bar high, and that is certainly a powerful sign of strength. And the red bar high I'm talking about is this big red bar here. You see down below, I got large volume on a big wide range bar. Anytime you close above a bar like that, that's showing some strength in the market, and that's why I think it can probably hold up here for a couple days, maybe even float a little bit higher until we go down. What am I looking for in the long run? Probably some sideways consolidation here, maybe a down move before we get a larger up move into spring. The big move down, I believe, will come in the middle of March sometime. Still trying to narrow that window down, but in the middle of March sometime, just around springtime, is when I expect a larger move down. The one on Wednesday, I'm just expecting weakness. I don't know how violent it will be, or not so violent, but I expect weakness on Wednesday, maybe to wipe out the last couple trading days before we go higher. So how's this market trading here? Other factors that we take a look at to see to determine what's going on is we got the IWM, or the Russell 2000. Now, the Russell 2000 is small business in America, and when small business in America, or the IWM, lags the rest of the market, that is an indicator of weakness in the market. So as you can see on Friday, this did not close above this red bar high, unlike the spiders. Closed above the red bar high, as well as the NASDAQ. This is the Q, the ETF for the NASDAQ. it as well closed above the red bar high. I'll pull up the NASDAQ uh, futures for you just to show you. Well above that red bar high from last Monday. So both the NASDAQ and the S&P closed above. The Russell did not, so that's just a sign of weakness. The Dow closed above as well. But so Russell's lagging. That's a sign of weakness in this market. So I talked about what I think would happen with this market. One last factor that I am that lends itself to be a little wary about this market is the TNX or the Treasury. This is the ETF for the 10-year Treasury. Now, why am I bringing up this? This is a bearish pattern right here. Large down move, sideways to upwards consolidation, and this some moving averages here. We've talked about this type of pattern before. Get the down move, upwards consolidation. Next move on this is going to be downtown Charlie Brown. So, what happens when the yield goes down? Well, when yields, this is basically the yield of the 10-year Treasury. When yields go down, that implies that the bond prices are going up. Now, when bond prices go up, that means there are more buyers and sellers, right? Higher demand for bonds than there are people selling it. Who are buying the bonds? The people that are selling stocks. That's what happens when these hedge funds, mutual funds, institutions sell stocks. Is they take the money, they have to put their money somewhere. They take that money and they buy bonds. Bond prices go up, yields of the bonds go down. Think of it like it's almost like a dividend, the way a dividend works in a stock. So if a stock says I'm going to pay, my stock price is $10 a share, and every year I'm going to pay $1 dividend. Well, that's basically a 10% dividend. Well, if the stock price goes up to $20, right, $20 a share, I'm still paying that dollar dividend. That percentage rate is now only 5%, so it got cut in half. But the price doubled, the yield or the dividend went down. So that's kind of how similar to how bonds work there. So bond prices go up, yields go down. So money comes out of the stock market into the bond market, and bonds go up, yields go down. And that's what the TNX chart is telling me, is that yields are going to have another leg down coming up, and that tells me, well, if the yields are going down, that means bond prices are going up and the stock prices are going down. So common if-then thing, 7 degrees of separation, if you will, but they are certainly related. Bond prices, bond yields, and stocks are all related. So, that being said, I'll be taking half off my SSO trade tomorrow, setting a break even, or in the money trailing stop in that SSO trade. That's turned out to be a nice trade. I'm up $5.50, so over 6% on that trade right now, taking half off. So very profitable trade. Let's move on to gold. A lot of people have been writing into me, asking me what's going on with gold. They're expecting a faster, larger move up, and gold needs more time. It's like I said before, it's a bullish year for gold in my opinion. It just needs more time to consolidate. Likewise, it's going to be a fear trade in 2014. So when the price of stocks go down, this thing will go up as well. So taking a look at the weekly chart here on gold, is the bigger time frame is more powerful. And the bigger time frame would be the weekly chart here. And what are we looking at here? We need some more sideways consolidation before we go up. And I pointed this out several times before. We get this large W pattern that is very powerful, very bullish. Even sometimes the WV pattern is the full pattern is what we're looking at there. So what we need here is some more consolidation here in the weekly chart, so we can bust up higher. And this thing can go up to 135, 140, 145. As long as it consolidates. If it consolidates down here, builds pressure to go up, it can get up that high. If it goes right now, it's not going to go up that high, maybe up to 130. So we want this thing to consolidate sideways before it builds lots of pressure to go up. So that's what I'm thinking about on gold. I'm still looking for an entry price. Still trying to get a more fine-tuned pattern on the daily chart so I can get an entry on the gold play here. But I can't. It seems to be a little bit too choppy for my liking to comfortably get in on the gold trade. But I am still looking to get in on this thing. I have to look at this and find a price. As you can see, Friday went up another $1, so I'm looking for some sideways consolidation, slow drift down, some more organization and structure to this pattern before I get into it. And I'm thinking, maybe a 120 break of 120 level might be a good entry if I can get the pattern to go with it. A couple people have been writing in asking about the GDX, the market vectors, gold miners. And again, if you have any questions, you can. It's topgunstocktrading@gmail.com. A couple people have been writing in saying, "Hey, look at this GDX chart. It looks like the move you've been talking about. You got a large up move with sideways consolidation. When's this thing going to take off?" Again, like gold, the GDX is the gold miners. We want some more consolidation of this thing before we can get this thing to take off, or before we want this thing to take off. So right now it's a sideways consolidation. The weekly chart's looking very nice. Maybe 2-3 more weeks worth of consolidation above this 20 MA, 20-week moving average. If we can get that possibly at the end of February sometime, will be a nice time frame. If we can still have, if this pattern is still intact and still above that 20, it'll be a good time to buy the GDX for a move higher. How high can it go? Well, if it consolidates for that long, I mean, it can go up to $32, $33, even up to 35 is probably a good target on the GDX or the gold miners. A couple other plays you can play that I don't. If you want to go 2 times ETF or 3 times, you can do the nugget, but I don't play the 3 times. Very rarely do I play the 3 times. I will occasionally, but it's no more than for more a day trade or a 1 to 2 day trade, because these things have such decay in them because of the leverage that they have to achieve in order to advertise themselves as a 3 times ETF that you can get hurt on. It's definitely not a long-term trade to be in these leveraged ETFs. They're 3 times ETFs. I very rarely do. 2 times at most is what I do. But there's the nugget for the GDX when we do get on. I'll just be playing the GDX though, just a one-time ETF, which is good for me. Again, I'll be looking for that at the end of February for that time to play out for us. Hey, let's take a look at the FXC, the Canadian dollar. Looking at the commitment of traders report again this week, the institutions are going more long on the Canadian dollar. I don't know how you can go more long, but they are buying more long. Their long positions increased and their short positions decreased. So their net position was more long, if you will. So I still like this trade. I think we put in a bottom here, at least a temporary bottom, and I'm looking for 92, maybe even up to $93 for this trade. There's a pretty significant resistance here at 93 bucks, so I'll be looking to get out of this trade 92.50, somewhere around there, and that's probably going to be right when that 20 moving average moves down. I'll be looking to take probably half off at 92.50, but again, FXC still a good trade to be in. I like it still. It's a slow and steady trade. I am in the money just a little bit, nothing to write home about. Like I said, I like this. We talked about this move last week, about this up move, sideways consolidation. It did break a little early than what I was expecting, and usually when equities or ETF in this case breaks up or down early, that means that the move is going to be a little bit smaller than what we're expecting. So I'll be watching this trade carefully and determine when we can get out and take at least half off profits there on the FXC. But so far it's been we're in the money just a little bit. Hey, let's take a look at some financials here. JP Morgan I like to watch as kind of a barometer of the entire market. It got above that red bar high last week. It put in a what we call a doji on Friday when the market was roaring and soaring. This equity JP Morgan was only up a quarter percentage point. So what's that tell me? That tells me the relative weakness in JP Morgan. And when JP Morgan's weak or the financials are weak, then that's telling us something that the legs in this market, that the market doesn't have much legs left, because when this thing drops, it's going to pull the whole market down with it. Taking a look at the weekly chart, you can see large inside bar action from 3 weeks ago, working on JP Morgan here. So when's $58 is going to be when JP Morgan gets to 58. Hopefully the market will be edging up, and it'll be almost time to short the market as well. Hopefully those two equities can time themselves or synchronize themselves to hit the JP Morgan hit 58, and the S&P get some sort of time factor in there, so we can have two signals to short this market. And again, I'm looking for possibly Tuesday or Wednesday to short this market. We'll see how it goes. Goldman Sachs the same way. When the spiders up 1.25%, Goldman Sachs is up 0.11%. So lagging the market significantly. It is in the support here. You can see a support line I have drawn in there at 160. It bounced off of there. You had the 50 moving average. I can tell you the 50 moving average is minor in this case. So expect a minor bounce there, which it did. Probably this thing's probably going to be moving lower sometime this week. As you can see the large red bar. Again, this is an equity that hasn't closed above its red bar high there from Monday, like the S&P has, like the Dow has, like the NASDAQ has. So Goldman Sachs is showing weakness. JP Morgan and Goldman Sachs are leading financials. When these guys don't lead the market, they're not leading the market. That's telling you that this market is on thin ice again, and it's probably going to be the trade is going to be to the downside. So, what's a good short on Goldman Sachs? Probably 165 level up in here. That would be a good short. Again, Monday, Tuesday. If this thing is approaching, especially Tuesday afternoon, this thing's approaching 165 on Tuesday afternoon. That's going to look like a beautiful short for Goldman Sachs. I'll be putting that on my watch list to get that one off. Just taking a look at my notes here. Yeah, Goldman Sachs short at 165 if it can get there on Tuesday. So you've heard it here first. Looking to short the market on Tuesday and Wednesday. Looking to short Goldman Sachs, and I even gave you the level there for Goldman Sachs. I'll give you the exact level of 165.15 is going to be my level that I'm going to put in there, assuming we still have the pattern. And I can't go up there tomorrow, because if it goes up there tomorrow, the pattern is going to be ruined in my opinion. So again, we're looking for a three-dimensional trade according to my methodology that I employ. Three-dimensional trade. You need a pattern. We have a red bar, sideways consolidation. That's our pattern. It's in spirit of bearish bear flag there. We have our price, which is going to be 165.15 there. It's a prior support level right here, prior resistance level. Beautiful, beautiful price. And then our time factor will be coming into play on Tuesday. So, man, that's a beauty trade setting up for us. Moving on to corn. Corn, we're in. I'm in love with this trade as well. Actually, I'm not in love with it. You shouldn't become in love with any one of your trades. You should be able to cut them when they're cut the losers, keep the winners, and take some profits somewhere in between there. So I had corn way back here, 30.65, probably about on this day here, 1/14, January 8th. We had this big, large up move, sideways consolidation. We got above the moving averages. Now we're sideways consolidation again. If we can hold that sideways consolidation above these moving averages, we're looking for a larger or another up move up into the 32.50 level. So I'm looking at a move 32.50. That's probably where I'll start taking profits on corn. So another 90 cents. I'll be looking to take profits on corn. Another nice trade. We're in the money there for $1. So nice 3% so far. Still looking for a little bit more. We had one trader wrote in, asked me about the VXX. He's thinking, hey, is it time to go long the VXX? And my answer to him was no. Don't try to jump ahead of this market. Don't try to go long, go short, go long, go short. The market doesn't turn that fast. It's like a big freight train, if you will. You just can't stop on a dime with a freight train, or maybe a big one of those big super tankers in the ocean there. That those things can't turn on a dime. It takes time to turn those things. So that, you need a couple days, a week or two for the sentiment to change, for people's emotions to take hold, and for the market to change direction. So we've been heading up the last 4 or 5 days. Give the market time. That's what it needs, is more time. I would not go long the VXX, even though it is in to 2 moving averages here. It's still, VXX is a 2 times ETF. I wouldn't. I personally don't even trade the VXX. I don't like this thing. I think it's a. I have my reasons for it. I'll get into it in another day if you'd like. But the VXX, I think, is crooked as a crooked ETF and probably shouldn't even be traded. It just takes people's money. All right, what else? I should have covered SLV with gold. SLV is putting in a nice pattern that could possibly be setting up for a long position here in the next couple of days. You can see up move, again, sideways consolidation above 2 moving averages. So what kind of time frame are we looking for on SLV? We're probably looking at probably Wednesday or Thursday to go long SLV, assuming it's maintaining the sideways consolidation and assuming it's still above these moving averages. Probably a long position in SLV around the 1905 level is what I'm looking at. Assuming this pattern holds, we can do that. Let me go ahead and write that down. I got my watch list here that I like to write down, like to watch. I'll write down Goldman Sachs. It'd be a short at 165.15, and then SLV, and that's on Tuesday. SLV would be a long 1905, and we're looking at Thursday for that one. Again, if the pattern still holds up, all things being equal, I'll update you on my videos, as well as the Traders Forum, and then the Fox 3 alerts, which only members are privy to on the Fox 3 alerts. Take a look at some other trades. Again, this video is getting a little long, but it's a weekly video, so bear with me. Amazon, I'm looking to get a short off as well. This is kind of a trickier equity, in that it's such a strong equity, and people, the street is in love with Amazon for, I don't know why, but they are. So shorting this stock is pretty tricky. So I am looking for. I always look for the higher level. If I see a good level, 2 good levels, I'll take the higher of the 2 levels. And I'm looking for about the 385 level is what I've come to on this one. Probably the 50 is going to curl over by that time. So if this thing can get up to 385 in the next, probably by Wednesday, I will probably have to take that trade. Again, we'll see how that works out. But Wednesday for 385 on Amazon. And forgive me for writing this down as we talk, but I'm looking at it as we speak, evaluating that real time for you. IBB is one I've talked about for a while now. Had a pretty strong day on Friday. In fact, it went up 4%, almost $10 on Friday. That's a pretty strong move. It did not take out the red bar high from last week either. So, but it's not as pretty as a pattern. Not as a pretty. It is still inside bar, but it's not as a pretty consolidation inside. So we may have to step back from this one and see what kind of pattern it's going to give, just because of that large move there. If it can close above this red bar high, it looks like it might go higher. It's also got some kind of W pattern it's putting in, but keep in mind that bullish patterns at tops of charts and bearish patterns at bottoms of charts have a high tendency to fail. So this is a sucker pattern for all the amateurs to jump on this train, only to yank it back down or reverse it sometime. But we'll monitor IBB. Not as good as trade as some of the other ones we have. Also, Win has been ripping higher. The last 3 days, it's got a 3-bar surge. Wow. 3-bar surge Wednesday, Thursday, and Friday. Taking a look at this real time here. Let's see. 42, 22. Yeah, it's pretty close to its max move, in my opinion. We'll have to monitor this one as well. 223. Even number 225. I think 225 is probably a good spot for Win. I'll monitor that this week. We'll see how it goes in the 225, but that's a pretty strong stock above all 3 moving averages. Tough to short a strong stock. Taking a look at Herbalife. Herbalife has got the couple big down moves. It's got the nice consolidation going up below a couple moving averages. Again, it looks like some micro bullish pattern putting in inside of overall macro bearish. So kind of got to rate this neutral. Probably has some upside to 73 bucks is my guess, but this is more of a neutral. I wouldn't nothing I can play right now. The pattern's not clean enough for me, but let's take a look at the weekly chart and see what that says. Yeah, the weekly chart looks pretty clean. Get another bar that looks like this this week on the weekly chart. Let's see, open and close. 370, 37. Yeah, that might be a good short there. I'll have to come back at this one. I have to do some more calculations on Herbalife. Nothing I'm gonna put out there right now. Qs, I love the Nasdaq right now as a short. Not this second, but maybe in the next couple days again. I'm looking for a Nasdaq short. Probably at a Pierce of 88, and I'll probably play that via the QID. Again, we'll have to evaluate that one. It got above this red bar high, so we're looking at this red bar here over here at 88 to go short on that. Again, if it can get in, that's just one factor. That's just the price. We still need a time factor and some sort of pattern. So probably a lower percentage trade than our other ones. We'll have to keep monitoring that via the Qs, see how that plays out. All right, folks, what am I expecting this week? I like to give you guys my outlook. So it's more so for me, just so I know how I use these outlooks is it tells me how to basically trade the market. It's basically a overall stance I have. Am I looking for shorts? Am I looking for longs? Type of thing. If the market's going up, I'm not gonna be looking to short the market tomorrow when I expect the market to go up tomorrow. So that kind of thing. Also on Wednesday or Thursday, I'll be looking for the market to go down. So I won't be looking for many longs when I think the market's going to go down big time. So right now, I think the market has probably 2-3 more days to the upside or neutral, and then I think it's going to run into some timing factors as well as some resistance levels. So I'll be looking for the market to come down, show some weakness on Wednesday and Thursday of this coming week. So we'll see. All right, folks. I hope you had a good weekend, and we'll see you on the charts, and let's rock and roll. Thanks.